Here's how you can make $525,000 a year building a self-storage facility. Hi, my name's Nate Jones. I run this channel. I make videos on entrepreneurship, businesses, and which businesses you should start. And today, I'm talking about a self-storage unit business. And I'm talking through how much does it cost to build, how much you can cash flow, and you'll be astounded once you find out how much money can be made in this business. So let's go into this. Let's jump into this right now. Let's go into the cost. I was looking through for an average 50,000 square foot facility. It's going to cost about $2.5 million to build and to probably acquire the land depending on where you're at. Could be less, could be more, but I'm rolling through averages here because at the end of the day, the numbers should be around the average unless you're in a very populous area like New York City or California. So for a 50,000 square foot facility, you're probably going to get anywhere from 500 to 540 units of storable space. So I put us at a conservative level of about 500 units. You're going to probably have to get a loan on this unless you got $2.5 million laying around in a loan. And I'm going to tell you why you would want to get a loan on this, because the ROI is actually bigger when you can use other people's money. So to get a loan, you're going to have to put 25% down because this is a commercial loan. So a 25% down is $625,000 down. Now, you can crowdfund this if you get a bunch of people together, and you can see how much money you can make, because obviously $625,000 is a lot of money for an average person. So if you guys can pile your money together, you could probably come up with a down payment. And when I go through how much you can make in this, it might encourage you to do that. $625,000 down would put you at a $15,000 monthly payment, and that's at a 9% interest rate. With the way interest rates are now, it may be closer to 10 or 11, but I put it at 9 on the low end because if you can crowdfund it and you have a lot of backing, this will actually put you at a really good spot to potentially negotiate a 9 or 10% loan. Your insurance is going to be about $300 a month. Other fees, I put in around $200 a month, so your total fixed costs are going to be around $15,500 a month. That seems like a lot. Hey, $625,000 down, $15,500 a month. This is a little scary, Nate. So let's go through this. How much can we make? Because I'm going to make you feel better once we talk about the income. And when I ran this scenario, I put it at a 70% occupancy rate. Most self-storage units try to be around 80 to 85. I put us at 70 because I like to run conservative numbers and not overhype how much you can actually make in this business. So that puts us at renting out 350 units. Now our total storage unit has 500 units, okay? So we're at 350. So 350, and I put the average rent at $125. Now you can charge more, it may be less in certain markets, but the average is probably $125, and it's on the lower end because, like I said, I like to be conservative with my numbers. So $125 is the average rent times 350 units, puts us at a a total gross revenue at $43,750. So $43,750 minus our total fixed cost monthly, which is $15,500, puts us at a cash flow of $28,250. Our total gross revenue would be $525. Our total gross cash flow for the year, our net income would be $339,000. Our ROI on the $2.5 million, so our total purchase price is $2.5, the cash flow of $339, that's going to be a 13% return. So so the cash flow on that total asset value is 13%, so that's pretty good. As long as you're doing that every year, you're making a 13% return. That's pretty hard to do consecutively in the market if you're doing it year over year. But let's go back. Wait, we only put $625 as a down payment. So what's our ROI? $339 divided by $625, because the storage, other people are paying for our asset. Other people are paying for our loan. So that means that the $339 divided by the $625 puts us at a 54% return, because that's our cash flow. That's our yearly cash flow. The $339 divided by $625 puts us at a 54% return by using somebody else's money, the bank. So, pretty great return. Very hard to get a 54% return in the stock market or in other investments. So, just shows you, like I've said before, buying businesses, starting businesses provide the biggest return than you can find generally anywhere else. So how can this not work? Let's go through this, because every business we start, we need to be thinking through, how can this not work? Let's tear it down. Let's bankrupt it. Let's think of all the negatives and create strategies around those negatives. Number one, we have a bad location. Okay, this means that there's just not a demand. There's not enough people. Maybe there's another one across the street. We just didn't really think and do enough research to find the best location. Let me tell you, if you're going to be making a $2.5 million investment, you better either hire a firm or find some sort of franchise or some sort of company that will help you create an analysis of where you should place this self-storage place, okay? Because you do not want to make this big of an investment and choose the wrong place. So make sure you do your research, find a company, a real estate brokerage or a commercial real estate company that focuses in this and that can help you pick the correct location. Bad security. This means that you have a self-storage unit place. It's probably in a good location, but you have bad security. You didn't spend the extra money on making sure that this place is going to be properly locked up, that there's cameras, that there's theft protection, theft prevention. Because if people are putting their stuff there and they're scared that it's going to get stolen, they're probably not going to use your place. So let's make sure that we beef up security and hire a security firm to help us implement those security measures. Bad service. This means, hey, you have a great location, you have a great security, you have a state-of-the-art facility, but people just don't know how to interact with your business. They don't know how to purchase a self-storage unit. Your website doesn't work. Maybe your point of sale system at the place. I would recommend that you try to purchase a system that allows you to not have to be there all the time, kind of like a vending machine type screen and setup where they have them where, hey, you don't have to pay somebody to sit there because that would eat into your cash flow. But service is everything. Make sure you have great service. Make sure at the point of sale of, hey, from when they reach out to you to when they get the self-storage unit, that it is seamless and thought through and the client experience is there. The fourth thing is the control of the construction costs and your loan. So making sure that your loan is tight and that it's not going to fall through. Your construction costs are pretty well determined. Hiring the right general contractor, making sure that they've done it before so you know how much your potential upswing of extra costs is and what your downswing is, because whatever the quote of construction usually does not come out perfect. Usually there's more expenses left over. So making sure that you know what is your worst case scenario when you're building this self-storage unit and hiring the right company to make sure that those costs don't get out of control is super important. So working with a general contractor and making sure you trust that company and not just hiring subs and doing it yourself, I would really recommend doing that. Yes, it's going to cost you a little bit more money, but it's going to be done right because somebody has done it time and time again. Unless you're experiencing construction, I would recommend you give it to the experts that know what they're doing. After that, if all those things work out, you have the money, you have the location, you've done all those things, you've thought everything through, you've had your business plan, you've done everything, you need to legal up. You need to create an LLC to protect yourself from potential liabilities from hitting your personal finances. So what an LLC does is, hey, it protects me from, or protects my business as a separate legal entity from me. So if something happens, something goes down, and that LLC is shielding me from my personal assets. Another thing you need to do is you need to buy insurance on the property and buy liability insurance, which if somebody slips and falls, maybe something happens where you're liable as a property owner. It's very slim, very far in between that something could happen, but something could happen and you need to make sure you have liability insurance for that. You also need to have a contract with your clients outlining, hey, what are we locking you into? How does this work? What if we need to evict you? What does that whole process look like? Having a self-storage customer contract is very important because the contract is there if and when things go south, and it outlines what those steps are so you don't get yourself into legal trouble because both parties understand the contract and have signed it. So I would work with a law firm to draft this contract to make sure that everything fits where it needs to be. And again, hand it to the experts because you're going into business with a large investment. We want to make sure that it's done right. The last thing is, pull the trigger if everything seems right and you've done the research and you've gone through it and you've done this methodical approach to business and you're ready to do it. Pull the trigger because at the end of the day, there's always going to be some sort of small excuse why you shouldn't start a business. But at the end of the day, you got to start if you know this is a good business idea. I really like this business. It's very similar to an event venue, a winery, any sort of catering hall, real estate. Businesses do really well. If they're thought through and there's a good location, there is more of an upfront cost, and this is a barrier of entry. But if you can find a career or find another side business which brings you a lot of money, you can put money into a business like this and earn financial freedom because you have understood that, hey, investments in businesses that produce tons of cash flow allow you freedom in your life. So if you got value out of this video, hit like and subscribe, and I'll be posting more videos about businesses on my channel. So don't forget to check them out. Thanks.